Assalamualaikum. My name is Nur Huda Afia binti Abdul Malik. My matrix number is 06DAT23F1123. Now I want to explain about introduction of Parmalat Group. The Parmalat Group, once a symbol of Italian business success, served as one of the most striking examples of corporate ethical failure in modern history. Founded in 1961 by Callisto Tanzi, Parmalat began as a small dairy company in Parma, Italy, and grew into a global food empire known for its innovative long-life milk products. However, behind its image of prosperity and trustworthiness, the company was involved in massive accounting fraud that shocked the world in 2003. The scandal revealed deep ethical issues such as dishonesty, manipulation of financial statements, weak corporate governance, and the neglect of professional integrity. The Parmalat case demonstrates how the absence of ethical principles such as transparency, accountability, and honesty can lead to the collapse of multinational corporations and the loss of public trust. Next, I will explain about the background of Parmalat Group. Parmalat Rice began with strong ambitions to dominate the global dairy and food market. By the 1990s, it had expanded to over 30 countries and was seen as a symbol of innovation and Italian excellence. However, behind this success was a series of unethical financial practices. Company executive led by founder Callisto Tanzi created false accounting records and offshore subsidiaries to hide debts and fabricate profits. For years, Parmalat's management misled investors, banks, and the public by presenting falsified financial reports that portrayed the company as financially strong. This deception went undetected partly due to weak corporate governance, lack of internal control, and failure by external auditors to perform their ethical duties with objectivity and independence. When the fraud was uncovered in 2003, it was found that nearly 40 billion euro was missing, marking one of the largest financial scandals in Europe. The Parmalat case exposed serious ethical breakdowns, not only within the company, but also in the auditing and financial system that were supposed to protect stakeholders. It became a powerful lesson on the importance of ethics, integrity, and transparency in maintaining public trust and corporate sustainability.
Hello everyone, my name is Kirtana Balakrishnan and my metric number is 06DAT23F1148. Now let's look at how Parmalat's governance was structured before the scandal. First, the board of directors was supposed to oversee the company's management and make sure all major decisions were done properly. It included both executive and non-executive director. However, in Parmalat's case, the board was very weak and not independent. Most members did not question the founder, Callisto Tanzi, and allowed him and his family to control almost everything. This created a serious lack of independence and accountability inside the company. Next, the top management was led by Callisto Tanzi himself. Many of his family members and close friends held important positions. Because of that, there was poor internal control and a clear conflict of interest. Instead of being transparent, the management started creating false financial statements and hiding company debts to make Parmalat appear more successful than it really was. Then we have the audit committee, which normally plays a key role in reviewing financial reports and checking if internal controls are strong. But at Parmalat, the audit committee was weak and ineffective. They failed to identify the fake bank documents and false accounting records, even though those issues existed for years. Finally, the shareholders were badly affected. They trusted Parmalat because of its good image and the fake financial results that were published. But since they were not given accurate information, they couldn't make informed decisions about their investments. When the truth came out, many shareholders lost a lot of money. Now, let's look at the role of you auditors and what went wrong there. The external auditors were responsible for checking Parmalat's financial statements to make sure everything was true and fair. Their job was to verify the company's financial information, confirm bank balances, and detect any irregularities. However, they failed to verify the fake 3.9 billion euros bank account which didn't even exist. They relied too much on documents given by management without doing proper bank confirmations. Because of this, the huge fraud went undetected for many years. As for the internal auditors, they were supposed to monitor internal controls and report any suspicious activity to the board. But in Parmalat, the internal audit function was very weak. They were not independent and worked under Tanzi's influence, so they didn't question management or report what was happening.
Good morning everyone. My name is Kirsha Karnan and my metric number is 06DAT22F2003. Now I will explain about the issues and implication of this Parmalat group. When I am studying about Parmalat group, I identify a lot of issues when I am studying this case. The first issue is financial statement fault. Parmalat management falsified its financial statement to give the appearance of profitability and stability even though the company was deeply in debt. The executive created fake documents. They also overstated revenue by moving debt into offshore subsidiaries. This deliberate manipulation of financial record deserved investor, bank and regulator for several years. So, for this issue, the implication is the financial fraud caused severe damage to stakeholders. Thousands of investors lost their savings and creditors were unable to recover their funds when Parmalat collapsed. The scandal also caused widespread distrust in Italian corporations and highlights how unethical financial reporting can destroy a company's credibility and reputations. So let's see the second issue that I found in this Parmalat group. The second issue is failure in auditing standard and regulatory oversight. So in this issue, Parmalat scandal also exposed serious weakness in Italian's auditing and financial regulatory system. Observed red flags, both internal and external auditor failed to identify or report the fault. Regulatory authorities such as Italian stock market regulator did not effectively monitor the company's financial practice. There was a lack of coordination between auditor and different subsidiaries, allowing false accounting to continue undirected. So this issue's implication is the failure of audit and regulatory oversight damaged public confidence in Italy's financial system and auditing professional. It highlights the urgent need to stronger auditing standard, better enforcement, and improved coordination between regulatory bodies. The case serves as a lesson of governments when professional bodies to stringent ethical and professional framework to protect investors.